Okay, 3, 2, 1, let's jam.
What is up, guys? G here. Welcome back to another video. Today I want to cover the ride-hailing companies Lyft and Uber stocks. After the huge sell-off today after hours, I think it's perfect time to give you guys my thoughts. So I want to do a quick comparison from a general company business point of view, and then also from a stock valuation. If you guys follow me on Twitter, then you probably saw that I did tweet out I bought some Uber shares. If you guys don't follow me yet, definitely consider it. I post trade ideas and options flow. And actually, speaking of some options flow, you guys can actually also check out that link pinned. It will take you guys to the Unusual Whales platform, and that will actually give you guys an edge on options flow. So if you guys are trading options, I think you will benefit plenty from it. And if you guys do decide to use my link, you will actually get a discount if you ever decide to upgrade to a paid tier at some later point. Before we start, please note that these videos take a long time to make, so each like on the video is very much appreciated. And also let me know in the comments below which one of the two ride-hailing companies you guys use the most, and which one of these two you guys would be more interested in investing in. But with all that being said, let's go ahead and get started with today's video. So before we actually cover Lyft and Uber, I feel like we need to address the elephant in the room here, and that is going to be Lyft's first quarter earnings. So they actually did take a big hit after hours. Shares plunged on light guidance and continued driver incentives. Basically, their guidance for the next quarter and possibly for the full year of 2022 is not where the analysts expected them to guide, and they also seem to have to continually give incentives to their active drivers in order to keep drivers active. But yeah, overall, I think their earnings wasn't too bad. And actually, this is a great picture because it does show tons of demand. So with a lot of people actually going back out, and especially coming in the summertime where there's going to be a lot of vacations and families going out where they don't have their vehicle, they're actually going to be using taxis / Uber ride-hailing companies in order to get from A to B, and other many scenarios, right? So this is a great example of there's a lot of high demand, especially in highly populated areas like Los Angeles. And we'll actually compare some of the revenues to the expectations, because that also will reflect the high demand that's going on for this year. But yeah, I think this was a great picture that symbolizes the demand, especially as more people start going out. I just want to move down and give you guys an idea of their actual earnings breakdown. So Lyft actually dumped about 25% after hours, down to about $23, I believe. And it's not really on the earnings, it's really just on that forecast and expecting them to have to pay more drivers to keep them active. Because if you see, their earnings per share was actually really good. They did 7 positive cents per share versus an estimated loss of 7 cents per share. Their revenue really well exceeded their expectations as well, reporting about 876 million versus 846 million. So they smashed that on the earnings side. The thing that they really did have trouble with is their active drivers. So on top of them having to incentivize the drivers so they can keep these numbers high, they still missed the expectations here. So you can see 17.8 versus 17.9. So in my opinion, it could be that some of the drivers may be shifting over to a different ride-hailing company like Uber. Don't essentially think that the ride-hailing business is doing bad. It could just be that there be some drivers that are maybe transitioning from both different platforms. And not to mention that we do also have DoorDash, which they focus primarily on the food delivery. But in general, it's going to be the same group of people that are doing these jobs. And they could just be switching jobs between ride-hailing and to going into the food delivery business. But I will say that Uber is a lot more attractive company because they do have the food delivery side and they also do have the ride hailing. So it's really a combination of Lyft and DoorDash. So yeah, that was the first red flag. They're having a hard time keeping their drivers active. The second thing is definitely going to be that guidance, like I mentioned. So for the second quarter, they're expecting revenue between 950 million and 1 billion. And the Wall Street expectations are actually a little bit more higher. They're expecting about 1.02 billion in revenue for the second quarter. So yeah, the guidance and the active drivers is definitely going to be an issue for Lyft coming into the next quarter. And it actually also did bring Uber down about 10-12% after hours. But Uber's actually almost already back up to break even, because they did release a press release saying they are moving their earnings release up till pre-market tomorrow. So they are going to release their earnings at 7 a.m. Eastern tomorrow. And their reasoning to reschedule that is to provide a more timely update on the company's performance and guidance before the market opens. So a lot of factors going into that. It could be because we do have Powell speaking tomorrow. Maybe they want to go ahead and get that over with. If they have a bad earnings, they could actually write off the Lyft sympathy, since they already dropped based off Lyft earnings. But at least by seeing Lyft's earnings, at least Uber now knows what not to say to the investors. So hopefully that does help their conference call, just learning from Lyft and what they said. Hopefully Uber can maneuver cover themselves through those questions and not drop so much. Now that is if they drop. It could be that they reschedule it because they are confident and they can actually write off of Lyft's bad earnings and make Uber's earnings look a lot better. But yeah, as far as other big factors that they'll be looking at will be similar to Lyft's. They'll be looking at the additional cost to attract drivers. As you guys can see, this is a problem for both companies, but Uber actually does have a different income of revenue. They actually do have the Uber Eats, the food delivery business, and that's actually been helping them throughout the whole pandemic. So possibly some of the revenue coming in from that can definitely help alleviate the earnings for Uber, but we'll just have to wait to see till tomorrow morning. Alright guys, so let's go ahead and move away from the earnings for Uber and Lyft. We'll worry about that tomorrow. I want to give you guys a better overview of Uber and Lyft before we actually start looking at some of the details. So Uber is going to be a more diverse, larger company than Lyft. It actually operates in 72 different countries, and most of its revenue actually comes in from the United States. It also does have that food delivery service that I told you, Uber Eats. Lyft, on the other hand, only operates in the US and Canada. That does give them potential to expand into global markets, but for now that is the only locations that they operate in. They also don't have that dedicated food delivery service, but they do have an option within their delivery platform that allows drivers to pick up food, retail products, auto parts, and other things for their customers. And then one thing that they do have in common is they do both have a bicycle and scooter rental thing, but that does vary between cities. So from all that, you can basically see Uber is going to be a lot bigger company, and we'll actually see that with some of the revenues and income statements that we'll take a look at in just a bit. I also did find this really good article that came out last month. It's comparing Uber and Lyft, and it's really just breaking down all the sales between Uber and Lyft. So sales have gradually been recovering since 2020. That was during the pandemic, but the transaction data does show that the Uber sales has been going up. It's increased about 89% year over year, comparing that to Lyft, which has only increased their sales about 56% year over year. And that'll be data up to about March 2022. And then scrolling on down, you can see that they did break down the market share for both of these. So Lyft is going to have about 29%, Uber is going to have about 71% of the entire market share. And it's been pretty consistent. The market share has remained stable. Uber still dominates, taking about 71% of the US ride share and spending. And also take note that this market share does not include the Uber Eats side of the transactions. So that's going to be a different market that Uber does participate in and has income from. I also do want to compare the sales per customer. On average, the monthly sales per customer at Uber is about 86%, which is a 22% increase year over year. Likewise, the average sales per customer at Lyft is going to be about $77, which is going to be an 18% increase year over year. So from that, you can see that Uber's pricing might be a little bit more expensive, or it could be that a lot of the customers are using Uber a lot more frequently. Regardless of that, it is going to show you that Uber is going to bring in more revenue, and just doing the quick math there, you can see it's going to be an average about $9 per customer. Another way we can actually compare Uber and Lyft and break down those values even further is comparing the higher average transaction value and also comparing the number of transactions and how frequently they are using the service. So if you take a look at Lyft's numbers, on average transaction value increased about 8% and the average transactions per customer increased about 10%. For Uber, the average transaction value increased 7%, so it is a little slightly less than, but the average transactions per customer increased 14% compared to 1 year ago. So comparing that to Lyft, you can see that Uber is actually being used a lot more frequently. So it could be that they like the Uber experience a lot more than Lyft's experience. So for me personally, this is a really good landslide. 10% compared to 14%. Uber definitely takes over that category. And as far as the average transaction value per transaction, that's actually really close, 7 to 8%. So comparing those two values, you can really see that Uber does seem to be a better company just from those values. They both seem to have very competitive pricing, but it does look like more people go back to Uber than they do to Lyft. And one other thing that I did point out here is that Uber did reach a partnership with the New York City taxis at the end of March this year, and that's going to help them with the driver shortages and the rising fares. As you can see just from Lyft's earnings today, they are having a hard time keeping active drivers, so that can definitely be a differentiating factor as Uber goes into their earnings tomorrow. The last thing I really want to cover from this article is just giving you guys a little bit more comparison between Uber and Lyft. As I mentioned, Uber is more than just a rideshare company. In 2020, they acquired Postmates, which actually broke out their Uber Eats platform. And then in February 2021, they acquired Drizzly, which is a alcohol delivery service, so further expanding their suite offerings. And they did also get a prescription delivery partnership with Nimble and also a same-day grocery delivery with Costco. As for Lyft, they haven't really done too much. Like I said, they don't really have an actual food delivery platform, but they are taking orders, and they did get a partnership with Olo. But as far as really trying to penetrate that market. They don't really have a big exposure there. Right now, they're just focused as being a last mile delivery provider for restaurants through that partnership with Olo. So after going all that, you can get an idea of what each company, how far along they've come in this market sector. In summary, you can see that Uber does have a lot more market share with 70% of the market. They also do have their hands in a lot more than just the rideshare. But now I want to compare the charts. So the yellow and blue is going to be Lyft, and this is going to be their performance up to 2020. And the white and red is going to be Lyft, and this is going to be their performance. And so just comparing them side to side, you can see Lyft did start a lot stronger. They were trading a higher valuation than Uber. And then after the pandemic, they kind of converged themselves. And then shortly after that, Uber did expand into the food delivery. And that really did give them some divergence. And they started performing a little bit better than Lyft. Once people started going back out, you can see their performance is going side to side again, and it could be because both companies are primarily focusing on the ride sharing business. Up to today, you can see both of them are trading around the same price, and actually they did sell off to about $22 and Uber sold about to $26. But for the most part, they've really been trading side by side. So that's just a quick breakdown of how the performance has been through the last 2 years. Now let's pivot over and compare the stock price for Uber and Lyft, and also compare some of the market cap valuations. You can see Lyft before it actually plummeted down 25%, closed at $30.74, and Uber closed at $29.47. So from a stock price perspective, they're trading around the same stock price, but the market cap and the valuations are going to be a bit different. So Uber's market cap is going to be about 61.5 billion, and Lyft's market cap is going to be only 11.36 billion. Now market cap is just going to tell you how much the company is actually worth, as well as tell you the market's perception of its future prospects. So just kind of telling you how much investors are willing to pay for the stock. And so you can see Uber has a higher market cap, and that's just basically multiplying the entire shares available times the stock price, and it'll give you the market cap for each company. They both do have price targets around $55 and $58, Uber having the higher priced analyst target of $58.30. But as far as the valuation, you can see the price to sales is very similar as well. Uber's going to be trading at a price to sales ratio of 3.53, and Lyft is going to be trading at a price to sales ratio of 3.54. Price to sales are going to be very similar. That is just comparing the market cap divided by the entire sales. And so obviously Uber is going to be making a lot more money annually, whereas Lyft is going to be making a lot less, but they do have a smaller market cap. But essentially they're both going to have the same price to sales ratio. The earnings per share, and that's going to be on the trailing 12 months. You can see that Lyft is actually losing $3.02 per share, whereas Lyft is only losing 29 cents per share. So Uber does look to be on track to be profitable before Lyft. So that's going to be another thing that I do really like about Uber versus Lyft. The last thing I want to break down is going to be the financial summaries and just give you guys an idea of some of the earnings breakdowns. So we'll do that quarterly, and we'll also compare that through an annually perspective. So if you just break down the quarterly, you can see Lyft has been increasing their revenue from 608 from March of 2021, up about 50% from that quarter to about 969 million in December. Uber's actually going to be growing about the same rate as well. You can see they brought in about 2.9 billion in March of 2021 and almost made 6 billion in December alone. So about 50% as well. Just quickly glancing at the cash on hand, you can see Lyft has about $500 million cash on hand, whereas Uber has about almost $8 billion in cash. Both are well suited to continue operations. The diluted earnings per share is going to be negative 83 cents per quarter for Lyft, and the really bullish thing for Uber is that they did report a positive earnings per share in their December earnings, where they reported 46 cents per share. Now from an annual perspective, you can see that both companies are going to be losing money still. Lyft is bringing in about 3.2 billion annually, and they are losing about $3 per share, whereas Uber is going to bring in about 17 billion annually, and they're only losing about 29 cents per share. So just re-emphasizing that Uber is on a closer path to profitability, which a lot of investors actually like to see before actually investing into a company. Now, I don't want to go further into some of the metrics. Most of them are very comparable. They both have about the same price to sales ratio, so bringing in about the same money respectively to their market cap, but Uber does seem to be closer to profitability. The last thing I really just want to share with you guys is going to be their growth forecast. Uber is actually going to be growing about 57% this year, versus Lyft is only going to be growing around 32%. And then going into 2023, both of them are going to grow about 23% and 24% respectively. So bringing all that together, you can hopefully see why I think the clear winner in my book is going to be Uber. I really like the market share of 70% and the diversity in operating the fast food delivery as well. I also do like the road to profitability and in general just the Uber brand. I think Uber is the millennial and Gen Z favorite and really overshadows Lyft. Think of Uber as the preferred premium brand. I mean, you don't hear people saying, let me call it Lyft. You say, let me call an Uber, even if you meant using the Lyft brand. But that's just a quick breakdown. Let me know in the comments below which one you guys will be more interested in investing in and which is your preferred ride sharing company. I hope you guys found value in today's video. Please consider dropping a like for me and subscribe to the channel for more future videos. You guys have a great day. I will see you guys in the next video, and as always, keep moving forward.